Right, so joining us today to answer all your stock and investment related queries, we have Vaishali Parekh, the Senior Technical Analyst at Prabhudas Lilladher. Along with that, we also have Mayuresh Joshi, the Head of Equity Research at William O'Neill, to answer all your stock queries. Ladies and gentlemen, hope you're doing well. Hope your near and dear ones are well as well. Let's go across to the first query that we have coming in from New Delhi. Abhinav Das writes to us. He holds about 1,000 shares of Tata Power at 96. As a long-term investor, wants to know whether to hold or sell. Mayuresh, your thoughts on Tata Power? Over the last 1 year, it has seen a fair amount of strength in the stock price move. That's primarily on account of the company going ahead and looking to strengthen their balance sheet. But they called off one of the deals, and from then on, the stock has become a bit of an underperformer. What do you think the viewer should do?
Afternoon, Mangalam. First of all, I think be safe. I saw your tweets as well. I think people are out here to help each other. So be safe, follow rules, and we will get over this virus stronger and we will be victorious. Having said that, I think for the particular query for Tata Power, numbers on a Q3 basis were relatively better. Yes, the deal got called off, and because of that, I think the underperformance has been pretty stark in terms of price as well as volumes. But what really investors should look at over the next couple of years is the deleveraging on their balance sheet. So the net debt has actually come down to 39,500 odd levels, almost 1.6, 1.7 times on a debt equity basis. Divestment, which probably means that they're taking off their non-core assets. There has also been an infusion from the promoter. So the balance sheet has definitely got strengthened, and that means interest costs are definitely going to come down in the next few quarters as well. The second element, Mangalam, is the investment REITs, so the InvIT that is probably expected to come through. That can have a huge amount of value unlock to come through. And the third element in terms of their coal JV, the hedge that probably happens, Delhi Marathon probably doing well in terms of performance as well. The EPC business, as per the management commentary, more traction in orders probably seen and more profitability probably expected over the next few quarters as well. And the renewables business, the takeover of Odisha Discoms, all that should incrementally start adding up over the next few quarters as well. So yes, I think slow and steady debt reduction, cash flows improving, and dividend yield staying at 1.5%. I think it's a solid story on the renewable space and their core business as well. So if the investor has a medium to long-term view, she or he can very well hold on to this.
All right, Mayuresh, hang in there, because guess who's back? We have Sumera with us. Sumera, work from home causes its own connectivity problems, but good to have you back.
Thanks, Mangalam. Well, just can't stay away, right? Can I? Well, good afternoon, Mayuresh, Vaishali. And Vaishali, let me come to you on Tata Power. Mayuresh says it's a hold. Technically, what does it look like?
Technically speaking, well, the long-term trend is pretty much intact, and there is some bit of consolidation, but this area would be a good buying area. I mean, 85, 88 is a very good support level, and from here on, the risk-reward ratio also is very favorable. In times to come, well, the first target one could look at is around 117 to 120.
All right, up next, Shrabani Dey has written in to us from West Bengal. He wants to know whether it's the right time to buy Nifty for the long term. He's looking at an investment amount of 1 lakh. Vaishali, coming to you again on this. Nifty options, a good idea?
So I would say it would be better to buy in tranches, because we are seeing a lot of volatility right now. And time and again, we have seen that 14,100, 14,200 has been tested, and it has proved to be a crucial support. So I would say it would be ideal to buy in tranches.
Keep that in mind. The other query comes in from Mumbai. Ravi Thaneja writes to us. He wants to know which public sector bank can yield at least 20% returns in the next 3 months. Mayuresh, this is a very specific question. Time is specific, return is specific, sector is specific. Which someone knew so well. Which public sector bank do you think can give 20% returns in the next 3 months?
So very short periodicity of time as per my estimates. But again, I think you really need to give it time, right? Because what has probably happened, or what is expected out of Q4, I think a reasonable number is expected as well for any of the larger public sector or the mid-public sector banks, where the merger news, divestment news is also keeping the stocks afloat. However, I think Q1 and what kind of degrowth do we probably witness on their balance sheet in terms of advances growing at a lesser amount of pace, maybe asset quality pressures and provisioning building up on the balance sheet. So I think 3 months is too short a period. I think private sector, larger banks still preferred, in my opinion. If you have to take a call on public sector banks, Mangalam, I think wait for these numbers, see what the management commentary is, look at the landscape, what is happening over the next few weeks. But then the larger ones, probably banks like SBI, once they gain price and earning strength, and the commentary is good to support and abet this, they can probably be looked at. But at least over the next few months, I think it's the larger private sector banks who can probably still assume and maintain their leadership position.
Well, this is a tough question, and Mayuresh, apologies for putting you on the spot, but I'm going to do the same with Vaishali too. Vaishali, technically, which PSU banks do you think are looking the strongest right now? I mean, I don't want to peg it at a 20% rally, but what do you think will do well?
Well, so of course it has to be SBI to start with, and then I would look for buying opportunities in Bank of Baroda and Canara Bank, because as I said, there has been a good amount of profit booking taking place. So this would be a good level to accumulate these stocks.
All right, so that's the view coming in on the PSU space. The other one comes in from Bhopal. R.S. Nath writes to us. He says that pharmaceutical stocks have been rallying quite a bit for the last few weeks. Which sector other than pharmaceutical would be advisable to buy? Vaishali, your thoughts, because pharmaceutical have been doing well. The pharma space has been doing well. Alongside that, IT has been resilient and metals have been on an orbit of their own. Which other sectors, apart from pharma, would you recommend? Would that be IT, metals, or do you have a surprise?
So I would say, of course, pharma, IT, they would continue to be bullish, but now bank stocks and auto stocks, they need to participate. So I would definitely go for a new entry. I think banking stocks and auto stocks look very attractive at these levels. So I would really focus on banking stocks and auto stocks. And along with that, of course, auto ancillaries also.
Okay. Good suggestions, Vaishali. Mayuresh, what about you? If not pharma, then what?
Yeah, so pharma seems to be the hot spot at this point of time. So I think selected names, yes. But it's going to be typically a sector rotation like we've seen post-pandemic last year as well. So I think the next 2 quarters, I think it's going to be more defensive-led, pharma, FMCG, IT. But as things start normalizing over the next few months, and as we start envisaging better numbers in the second half, and hopefully I think better equipped in terms of infrastructure facilities and government spending aiding all these aspects, the high beta correlated stocks will come into the fore. So the next 2 quarters, I think it's more or less pharma, selectively specialty chemicals as well, because I think what you've probably seen in terms of end product prices have actually expanded. So the kind of spreads that these players are enjoying, the entire hope that we are driving through in terms of capacity build up, the China +1 export opportunities coming their way, that looks like a very, very interesting space over the next 3 to 4 quarters. And a quarter and 2 quarters down the line, as I was saying, I think banks, cement, infrastructure, they should come back in a roaring fashion. So I think you can place your bets accordingly over the next few quarters.
All right, Mayuresh, Vaishali, do stay on with us. We're going to take a quick break, but as we do that, we're going to leave you with some opinion that's come in from Andrew Holland, CEO of Avendus Alternate Strategies, and he says that the big cue now to look out for is a pickup in the vaccination drive. I mean, a cue not just for the market, but I guess, the entire country is waiting for this pickup in the vaccination drive. And, therefore, we also appeal to everybody who's watching to please mask up, double mask up, maintain social distancing, and as far as possible, stay at home. But nevertheless, coming back to what Andrew says, is that he's looking forward to investing in economy-facing stocks. Hear him out.
Let's look at what happened, globally when you've had these lockdowns and what happened to the markets from the highs. And basically, most of them fell anywhere between 8 to 10%. So if you notice with our markets from our highs, when we're kind of hitting that kind of 7.5%, 8%, we're kind of bouncing back. So the real key now is probably not the number of cases, which will probably likely rise. You don't know when the peak will be, but really the vaccination rollout. And I think that's the key. Those companies got pricing power over the next quarter or so will do exceptionally well. It's been a tough one because you had that very strong bounce on the banking sector over the last few months before the recent fall, on the back of the the economy opening up. I think everyone's worried about whether the banking sector can really pick up. The good news is that they came into it having raised a lot of money over the past year, so have used the stock markets well to replenish the balance sheets. So they're in much better shape to withstand this. Got to be in the economy-facing stocks going forward, and that's really where the value is. Unfortunately, there's a very limited number of stocks to play real estate, but I think, in my view, I think we're all going to be saying, do we need to have more space if we're going to do work from home? Do we, is 2 bedrooms enough? And maybe we need 3 bedrooms. And I think that will continue to gather pace. As the economy reopens and people utilize some of their savings, towards this. So I think, but the best way to play it is obviously, the suppliers to the whole kind of construction industry, from paints through to cement, through to furnishings and so forth and so on.
केयर हेल्थ इंश्योरेंस से 25 लाख का हेल्थ इंश्योरेंस केवल 558 रुपीस पर मंथ पे लीजिए।
At the heart of every great change is a great human. Come help us create value with businesses everywhere.
ये है सचिन कुकरेजा। इन्हें टोस को टच करना मुश्किल लगता है, पर अब स्टॉक्स पे इन्वेस्टिंग इन स्टॉक्स इजी। स्टॉक्स बाय या सेल करो सीधे अपने फोन से। अब स्टॉक स्टार्ट करके देखो।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Attic Fittings make your furniture work beautifully.
Hi mom, फिर से शॉपिंग? बाबूजी, आपने इसे बिगाड़ के रखा।
लिमिट में करो तो कुछ बुरा नहीं होता है।
बिना लिमिट शॉपिंग करेगी आपके कार्ड पे। ऐड ऑन जो है।
मैंने तो कार्ड पे लिमिट सेट कर दिया। अच्छा, इसके फायदे ये हैं कि रिस्क कम हो जाता है और अगर फ्रॉड भी हुआ तो तुरंत बैंक को बोल दीजिए, नुकसान कम।
दादू।
नेक्स्ट टाइम ये पिंक ड्रेस।
You're the limit.
लिमिट तो सेट है। RBI कहता है जानकार बनिए, सतर्क रहिए।
Hi, welcome back. Here with your stocks. Keep an eye on the market because again a bit of weakness is creeping through on the Nifty. And it's just down about 0.25%, but then we had seen a sharp slide about a half hour ago, and it looks like that again, there is some selling pressure. The names are pretty much the same. Dr. Reddy's, Britannia, Grasim, all of those are losing about 2.5%. So just keep your eye on the market for now. Okay, the next query that comes in is an interesting one. We have Mr. Naresh Gogia, and he's on the line with us from Mumbai. Mr. Gogia, good afternoon, sir. How can we help you?
Yeah, good. Please, I had bought this Yes Bank shares. 2 months ago, then it had gone up and now...
Yes, sir, go ahead.
I had bought Yes Bank shares. They had gone up a little bit, but then again they have come down quite a bit. So what should I do with these shares now?
Sir, are you a regular investor? Do you have other shares?
Yes, I keep on, buying. Basically, I'm more of a trader sort of thing. Not really trader, just, short-term trader.
Okay.
Basically.
Okay. Vaishali, let me come to you on this, because we've seen a lot of people have been looking to accumulate Yes Bank. I mean, this is a query that keeps coming back on the show again and again. And, being the volatile stock that Yes Bank is, invariably it ends up disappointing investors or even those who have a trading mindset like Mr. Gogia here. What would you recommend be done at the moment?
So it is clearly a downtrend, but the stock currently is retesting the previous low of 14 levels. So if he has already bought, I think he can keep a stop loss of 13 and hold this stock, because if we can see a bounce from here on, it can go up to 15 to 17 levels. So it has to be purely a trading strategy.
Absolutely, purely a trading strategy. Interesting, a lot of people go ahead and invest in stocks like Yes Bank, Vodafone Idea, looking for a bit of a punt, primarily because of the low price of the stock. They believe that maybe the downside is limited to the amount that they're spending on the per share price. We'll move on to the other query which comes in from Bengaluru. Shivakumar calls us. Shivakumar, hi, good afternoon. Hope you're doing well.
Yeah, hi, good afternoon. Thanks for the team. I have a shares of Delta Corp and I have a shares of Trident and KC.
Okay.
So I just wanted to know what I have to do. I have taken the Delta Corp for 530 shares at the rate of 67 and 9,000 shares of Trident and at 5.81 and 130 shares of KC at 193.
So you're making money in all your positions, Trident as well, right?
Yeah, Trident.
Yeah, you bought it at around 5.5 odd rupees. It's 13.5 rupees now.
Yeah, right.
Mayuresh, your thoughts on any of these, Delta, Trident or KEC? In fact, we had the management of KEC join us yesterday. They were pretty bullish on the order inflow prospects for FY22. Do you like any of these names?
Yes, Mangalam, I think what is largely happening is for Delta again, with those partial lockdowns, footfalls are expected to be lower. And because of that, I think the entire model that they are based on in terms of more footfalls and more volume traction, that probably takes some amount of traction away from an earnings perspective. So I think there might be some element in terms of earnings weakness. Out of the three, again, I think I was hearing the KC management yesterday, Mangalam, and they sound pretty confident and optimistic. So whether it's the EPC business that's coming through, the core T&D business, obviously had some element of impact in terms of cost time escalations in their Brazilian operations. What happens in terms of the receivable positions for the domestic business as well. And that clearly pushed up their working capital cycle to almost 130, 140 odd days. Even on the margins front, I think they were sounding optimistic of margins being 8 to 10%. But a strong order book, the revenue visibility, all the near-term concerns over the next couple of quarters, whether it's input cost escalations, the receivables position, the working capital constraints, and the stickiness in margins should start coming off because they've got two huge supports coming in from the railways and the civil business itself, and a double-digit revenue guidance is still being maintained. So yes, if he intends to hold on to the stock, I think KEC probably can be held on for a little bit longer.
Okay, the next query comes in from Rajneesh Jhulka, and he's written in to us from New Delhi. He says he has 300 shares of SBI, which he has bought at 365, and he has 250 shares of Apex Foods, which has been bought at 291. Now, he's a short-term investor and wants to know what to do at the moment. So, Vaishali, SBI, I know you've already said at the start of the show that you think it's the strongest stock. Anything you want to comment particularly on Rajneesh's buy price and the recommendation on Apex?
So Apex, of course, it's quite oversold, and it is a good buy. The risk-reward ratio is also pretty much favorable. Currently, it's at 212. So if the stock picks up momentum and it moves past 220, one can look for a target of around 250 to 260.
All right, let's move on to the next query. This one again, this one comes in from Ahmedabad actually. Chirag Sheth writes to us, holds about 10,000 shares of Max Ventures at 57 rupees a piece. A long-term investor wants to know what to do with his position out there. Pretty much at even Stevens as far as his position is concerned. Vaishali, your thoughts on Max Ventures, and if it's not good, any substitute that you would suggest?
I think the stock is seeing the trend, it's quite okay. I mean, it's a good buy at this level, but all the same, because this market is volatile, so I would suggest to keep a stop loss of 52 and let it cross 60, and then it confirms for further strength.
All right, Vaishali, Mayuresh, thanks very much for joining in and for advising our viewers. Keep an eye out on the market, but we're going to wrap up. From Mangalam, myself and the entire team of Your Stocks, thanks very much for watching. The team of Closing Bell will take the market action forward.